Good morning, ladies and gentlemen. I hope you are very well. Still figuring out that there's about a 10-second lag here in the YouTube live settings. So I guess I got to get used to that. Back again. Going to follow up on the Bitcoin versus S&P 500 analysis that I did yesterday. I have another chart to share with you. Going to transition into it right now. It's a little bit wonky, but I think that it will do the job. We got two axes here. It's gonna be all columns today. I'm looking at three things: look at Bitcoin, gold, and the S&P 500. Okay, start with the S&P 500. Talked about that yesterday. Talked about how the S&P 500 follows an exponential growth trend because of compound interest. And I didn't have this fact at hand, but the leverage of the S&P 500 is about 60% at the moment. That means 60% bank debt. 60% of the value of the S&P 500 is saddled with bank debt. Okay, well, that's good or bad. You can talk all you want about it. But in my opinion, that's the main reason why markets move in exponential fashion. So S&P, as we talked about, does exponential returns. Bitcoin is different. But then people like to talk about, well, is that a large return or not a large return? Is it good to be in Bitcoin? Is it not good to be in Bitcoin? Is it risky? Is it not risky? So on and so forth. So let's just look at the lifetime of Bitcoin here. Going from July 2010. These are the reason I started in July, even though my pricing data with Bitcoin starts in May. Bitcoin pizza days, we get the full month of June, then we can start doing these averages. But anyway, let's start with the S&P. Okay, so we got the S&P 500 in black, and I know it's not really easy to make sense of this. It's a bit wonky, but we'll walk through it. So left-hand side, the black bar is the left, the left bar that you see. I could have colored them differently, but whatever. You'll get the point. Just to see sort of the relative amplitude of these bars will show you irregularities. Okay, but left-hand side is the average monthly return. Okay, monthly return is just if you take the average price or average value. In this case, it's the index, right? So if you bought the index, the average value, and then what's the return of that each month, and then if you could buy one of those, what's the unit profit? Okay, so this is how the S&P looks, and going back to July 2010, looking at full months here, we see that typically, okay, this axis on the left goes up to 20%, goes down to 40%. Okay, obviously that's from this one candle right here, which we'll talk about. But typically, you can see most candles are on the positive side, right? Although there are some columns here that fall to the negative drastically. But most candles are to the positive side, and most are, 2, 3, 4%. But you certainly can have some that fall, quite deep negative. And of course, the one that catches the eye is right here. This is COVID. All right, we got a negative 19% monthly return, which corresponded to a negative $624 in value. So just for example, if you bought even the SPY, the ETF for the S&P 500 doesn't work exactly like this. The unit prices are different, but I just like to use the index. So if you could buy the index of the S&P, a 19% return would have been a $624 loss. But again, if you held through that, it wouldn't matter at all. The next month you were back up. So February and March 2020, it would not have mattered if you had sold that or not. So this is why, in general, people say hold, buy and hold, and that is true. That is true for stocks. So this is the S&P. All right, now let's look at gold. I haven't drawn recently a trend line analysis of the gold price, but it is similar to like I said, stocks, financial markets. Gold comes out of the ground at about 1.8% per year. And the gold price as well, even though it's been way up and way down in certain time periods from 1980 going to $850 an ounce for a couple seconds, down to $200 an ounce, under $200 an ounce in 1999, back up to $2,700 an ounce. Now, generally over the long time frame since gold has been decoupled from the dollar, it also grows exponentially. Okay, so let's put up gold now on the left and actually let's take off the S&P 500 profit. So now we're just looking at the left-hand side here, looking at gold percent returns versus the S&P 500 percent return per month. Okay. Interestingly, all right, if you're a gold bug, you got to deal with a little bit more Maalox moments than stocks, at least in the last 15 years. We're only looking since 2010. I'm obviously not catching the huge downdrafts that were, into March 2009, S&P going to 666. I'm not catching that at all. But still, over the last 15 years, remember, gold was relatively flat to down during this period. It rose up here. It was around $2,000 an ounce in this period. Then it went down, even down to $1,300 an ounce, and it was back up now to $2,700 an ounce around here. So that actually gives you more volatility. Okay. And you can see that. You can see that there's just more downward candles. These are all percent returns now. We're only looking at the left axis. All right. Compared to stocks, there's more down months with gold. So, just depending on how you want to look at it. Those are buying opportunities, or, if you need gold to sell it for your retirement, if your plan is to sell gold into retirement, all right, you might want to be prepared for some more downdrafts, even though in recent years, all right, specifically since the COVID sort of craze, there's been more positive percent changes per month in gold than negative. So let's reset the zoom here again. Let's take off the S&P. Let's look at the unit profit. Again, I know this is a bit wonky. I could have colored them differently. You got to look at the tooltip for this presentation. Now, average unit profit. Okay, so 1 ounce of gold in this case. Market standard, the ISO standard is pricing gold per ounce. Okay, so the average unit profit, it's the same dollar representation of the percent that you see in the tooltip. Okay, so if you see 3.3% and you had 1 ounce of gold, that represents a unit profit of $37 on average had you held gold from July 2015 into August 2015. Okay, these are just very smooth monthly averages. Okay, that's how you get these numbers. And again, to repeat here, we can clearly see that there's a lot more down months, a lot more Maalox moments with gold than with stocks. Again, I don't know what's going to happen with stocks in the future. Nobody does. But if you just look, let's put them all back. Let's see what happens here. There we go. Let's put all gold and S&P 500 little metrics here now. You look at this, and you can clearly see there's more gold bars that are negative in the mid-2010s than stocks. To be sure, again, the month of March 2020, the kickoff of COVID, was very bad for stocks. Okay, if you had sold here, that was a bad move to sell, and a negative 20% per month move, 240% per year. That'd be a terrible move to sell your stock portfolio at that month. And if you just held on to it, nothing would have happened. Right? You were back up the next month. So that's how you kind of got to understand this chart. And it is fair, I'd say it is fair to think about that with gold as well. I don't have a gold chart handy. I guess I should have for this video. But again, gold really hasn't done much in the last 15 years. The epoch of Bitcoin that we've had. Bitcoin's done much more than gold. So again, gold's been around $2,000 an ounce here, 2011, went down to 2013, $1,300 an ounce, $1,700 an ounce here, 2017, and then back up finally to $2,700 an ounce today. But just in general, the idea here is to show that gold actually gives you a little bit more Maylaks moments, gives you a little bit more hesitation, perhaps, if you are thinking about gold as some sort of a pension or retirement vehicle where you hold it, but in order to live off of it, you do need to liquidate some of it every month. There could be, that's a little bit disappointing if you got to liquidate on these sort of down months. Whereas stocks, again, to take off gold now, to be fair to the stock market in the last 15 years, and I know there's been a lot of money printing in the last 15 years. I talk about it a lot. To be fair, the stock return basket here is a little bit better than gold. All right, so let's take off that. Let's look now at just the returns. Again, we got gold, we got the S&P. Let's put on Bitcoin. Okay, as you might expect, the scales are going to change a bit here as Bitcoin is this new asset that has been becoming a global asset, $2 trillion asset at the moment, nearly 1/10 of the global monetary base. Really incredible. Investment flows into ETFs, all the rest. Let's put on Bitcoin average monthly return over the last 15 years. Look at these monthly candles, and here we go in orange. So this changes the scale entirely, as you can see, right? Before we were on a scale up to 16% average monthly return on the top end, and then down to negative 24%. Although, to be fair, that really was just this COVID month here of March 2020. Gold did have a really bad month here in June 2013. But roughly, you're talking about 10, 15% as the max, and really more like 4 or 5% as the mid-range, let's say. I don't want to say the average, but something like a mode. Put on Bitcoin, the scales explode. Okay, so let's just look at this. Everybody knows that Bitcoin was giving great returns for early investors. When you were buying Bitcoin here, it was under $1. When you were buying it here, it was a couple bucks, maybe $30 even here in June 2011. All right, you see that's a big return, 199% return compared to the average price, the average daily price in May 2011. Big return. Okay, and then you also had some big losses. Okay, instead of that negative 16%, right, as being like the max for like gold or the S&P, you can have in these early days 40% monthly losses. Now again, loss or return or negative return, these are also can be loosely defined, because if you don't sell, then you don't have the loss. And as the dollar remains the global reserve currency, I am, of course, using the dollar here as the numeraire of what we get into and what we get out of. So yeah, you could avoid all this heartache, of course, by not selling at all. Then you'd have massive compound returns equaling into today. But that's not this analysis. This analysis is just to show us where we go month to month over the life cycle of Bitcoin, the stoic asset, as I'm titling in this live stream, and as also our my friend here, Stephen from the Best Bitcoin Data Group, known as Money or Debt, he has called Bitcoin the stoic asset, which I very much agree with. So huge returns, monthly returns. Remember, these are monthly returns, so roughly multiply them by 12 for a compound return, compound annual return. Thousands of percent of returns here on average it could be in the early months of Bitcoin if you bought in 2010 or 2011. That starts to taper away already by 2014. And let's go into what they call the crypto winter here. Now we do see the scale changed. Okay, so let's, if I take off the early couple years, we were up to 500% on the left axis. If I zoom in after 2014, down to 200% on the top side. Still huge return though. Look, I still have gold and the S&P in this chart. And you can see how they're just dwarfed by Bitcoin's returns. Now, there are some negative months, all right? There are some negative months, but it's clear that you can see here that the positive months far outweigh the negative. And how do you read this like cumulatively? Well, you would actually just add everything up. So if you want to know cumulatively your return, if you bought Bitcoin like in 2016, you just add up these monthly returns. And I guess I could do that as a chart. Maybe I'll do it in the future. I know it's a bit static, this example, but you'd add up this 38% return, 54% return, subtract this 15% return. You just add them up and you can get to a cumulative average return if you bought Bitcoin every day since whatever, pick a date, 2016 or something, that would be your cumulative return. It's clear that if you add up all these bars, Bitcoin is way bigger than anything that you could get from gold or the S&P. But it gets even more fun and interesting when we look at the unit profit of a Bitcoin. Okay, and I'll back that up for here. We take off gold and the S&P. Now, unlike gold and the S&P on this chart, because Bitcoin is so, the per unit profits, that means if you had one Bitcoin and you just follow the per unit profit each month, it's so huge that actually the scale on the right-hand axis has to change. So I'm going to put that up right now. Okay. Per unit profit means dollar per Bitcoin that this percentage represents. Okay, so this is quite interesting now. This is where the stoicism of Bitcoin comes in. If you were buying just one Bitcoin in 2011 and you held it from, let's say, April to May 2011, 407% average. This means average return. So you take all the prices in April. All right. Assume that you buy at every day in April, and then assume you sell at every day in May. That's essentially what it's saying. But again, you don't have to do it. It's just a gauge, just to understand here what's happening. If you bought every day in April 2011, sold every day in May, it would represent an average 407% return, or $5 per Bitcoin. Okay. So let's assume you only got to one Bitcoin and then sold one Bitcoin. And you get $5. Right, the next month, as Bitcoin was screaming to $35 a Bitcoin, your average return is actually down, all right, from 400% to 200%, but your per unit profit is up. You get $13. Okay, so these were the crazy, silly numbers from those early days, and you can see the bars here of the per unit. They don't even really register until you get to 2017. So again, I could put on log scale. I'm not going to. I could zoom in, and you see them more normal. They will register, but it's all about scale here, right? So I've zoomed in to the early years. If I zoom out, stoicism, long-term thinking, what Bitcoin represents is sound money. Until today, these are just gigantic per unit profits that you can earn from holding Bitcoin. And again, if you want to just take the gross profit that you would make from one Bitcoin from, say, June 2017 to today, you add up every candle, subtract the down candles. So you'd add them up, subtract, add them up. You start to get to some huge numbers here. And then add them up, and that'd be your total gross profit for whatever you bought Bitcoin at that time. Okay. So it depends very much on where you are, where you're buying, where you're selling, so on and so forth. But this is just to show the stoicism of holding Bitcoin. So huge, we start to get to huge per unit profits. All right. If you bought here on average one Bitcoin in October 2024, every day you bought a little to accumulate to one, you bought 1/30th of a Bitcoin, 1/31th of a Bitcoin in October 2024, and then sold that Bitcoin every day 30 times in November, all right, monthly averages here, you'd earn $21,000 just by performing that action. Okay, you'd earn $11,000 in doing that in December. So these are huge, huge gains just from buying Bitcoin, or if you will, buying and selling. Again, profit, return, I understand. It all depends on you and your situation. But the net effect is gigantic. So let's put the percentages back now with the average unit. This is a little bit harder to see, I understand. Remember, average unit here for Bitcoin now, we're on the top number is to the right axis, and the percentages are to the left. So here, interestingly, we see, again, the huge percentages were very small dollar unit profits back in the day. Now, they're not as big of percentages, but a huge dollar profit on average. Okay, certainly some down months here. The FTX debacle came in here, end of 2022 into 2023. But the percentages actually are still pretty big per month. So let's zoom in now and let's do all compare them all again. This might be too noisy. I know this is a bit of a wonky chart. Let's take the profit off. Now let's leave the profit on and let's just look at the profits of gold. S&P 500. Okay, so again, I know it's hard to buy one Bitcoin now at any point here, right? It's let me just go back to the chart for you. Where's my rough range here from 2018? So we're looking at, anything from $4,000 Bitcoin 2019 to $100,000 Bitcoin if you bought today, okay, to 60,000 in between. So I know it's hard to get to one unit and to look at one unit average profit per month, but this is what it's turning into. Okay, so now let's look at that compared to gold. Well, if you had 1 ounce of gold, you can't even see it because it's so small. And let's just start to look at this here. So October 2020, 1 unit of Bitcoin's profit would have gotten you $1,200. Gold minus $5. November 2020, $4,770 profit on average per Bitcoin, just holding it 1 month there. Would have lost $119 per ounce of gold. To be sure, this is where the volatility comes in. This is where the stoicism comes in. You don't have to sell on these down months. You don't have to sell on these up months, but it just shows you. All right, this is volatility, these downdrafts. You have big losses here. Again, losses in quotation marks. Down to 10,000 per Bitcoin, 10,000 per Bitcoin, May, June 2021. Gold, not as much. Let's just zoom in. I still can't see it on the scale, but there's a gold bar there that's so small. $124 profit that month. Okay, so, whoops, I think I might have lost my video here. Got to reset it. As this reloads, let me take you back to this chart. Yeah, it reloaded. All right, so yeah, let's look at this again. Average profits. Gold and the S&P. Now, adding S&P in, having 1 unit of the S&P, if you could buy that. I know you can't really do that, but still you could buy the SPY index or variety of other ETFs. The per unit value in stocks and the per unit value of gold is still dwarfed by what happens during Bitcoin. Yes, I know Bitcoin is getting very expensive on a per unit value, but the returns are still enormous. And then if you want to still compare, if you say, well, I can't buy a whole unit, fine. We can look at percentages. Let's put them up now. Let's take away the per unit. still generally dwarfed by Bitcoin. Okay, so Bitcoin went up on average 95%. If you had bought every day in November 2017, sold every day in December 2017, you get a 95% return. Gold, not even 1%. S&P, 2.8%. And on it goes. Okay. Definitely some months where they're all pretty close. September 2018, October 2018. Bitcoin can go many months without having those big moves. But when those big moves come, because it is an asset that is being adopted, that is the key point here. It's an asset. It's a new asset that is protecting purchasing power. It's an escape hatch from the system. It's being adopted. Because it is doing that, it's very hard to keep up with it with other assets. Okay. So really doesn't matter where you buy stocks. Maybe if you bought here at the worst part, blood in the streets moment, right? You buy stocks when they're super depressed. Maybe for a little bit you could compete with Bitcoin, but just look at the size of that bar, that black bar there. It's just not even close to the rest of these orange bars that go up positive in the following months. So, again, you could just clearly see that Bitcoin wins very quickly in a matter of months. And perhaps this is another table that I should draw at some point. But in a matter of months, your returns, your percentage gains, your per unit gains, they just explode against the value of a traditional asset like gold or like the S&P 500. It takes months. And so even using the word stoicism might be too conservative, because stoicism implies a very steel resolve and not getting too worked up when, Donald Trump farts or there's some news about oil somewhere around the world. It's very loud every day. It gets more and more loud in the financial media and around the hype of the news cycle. Certainly concerning things with wars. But in general, if you want to try to protect the wealth of your family, protect yourself, it's clear that even as Bitcoin rises in a pretty large per unit value, these percentage gains are still winning. Let's even look at the, when we've pretty much been in fully 100 grand territory, which has been it's really from November. So let's just look from November. Obviously, that was a huge month in November. That 100 grand over whatever it was, 60 grand, 50 grand the month before, 32% return on average. And 2024 is still a 13% return over November. Okay. So those two candles, even right there, just dwarf anything that stocks are giving you, anything that gold is giving you. It's like from a pure mathematical standpoint, we can see that Bitcoin is winning here. And these are really tough periods here. End of 2020, mid to end of 2022. In fact, most of the pain, interestingly, happened, around going down from 60 to 40. That's what happened here in May, June 2022. Big percentage losses, if you will, down 23% per month on average twice. And then another 11%. Okay. But if you have stoicism, if you believe in the asset, and not just believe, but you research it, you understand it, you hold it properly, take the coins off the exchange, so on and so forth. Don't think about it too much. Dollar cost average in. You start to get these returns accumulate and compile. And these bars are very, very hard still to catch up with. That's the key, is there's no bar. There's no gold bar here or black bar for stocks, pun intended, I guess, with the gold, that can really compete with these just huge Bitcoin orange candles here, orange columns up. And it still is that way today, even with the large per unit cost. And if we put that back on, again, if you're lucky enough to hold one Bitcoin, if you look at it on a per unit basis, it's clearly not a competition still. I mean, get to one Bitcoin and you don't even have to look back. It's unbelievable. The per month changes. Yeah, you can have some big downdrafts here, quote unquote lose $9,700 per month on average in May 2022 and $7,000 in June, another $2,000 in July. But again, like I said, just accumulate, a couple more downs, but then look, positive, 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 a little negative, positive, and then just you get these huge bumps. This is the Bitcoin cycle. Okay. And everybody talks about this, right? I know I'm not giving too much new information here, but nearly everyone is quote unquote in profit in Bitcoin right now, right? Unless you bought it at $106,000, $107,000 per Bitcoin. Nearly everyone is in profit. Nearly everyone is in the green that has ever bought Bitcoin. And that does get challenging to buy during all-time highs for sure. But then you got to look back at this curve, understand that it's this curve, be a stoic about it. It's growing at 45% per year, this curve. That rate of growth is declining, but at a very slow rate of decline. And it's not growing exponential. It's not growing constantly, which stocks and gold grow at. They grow constantly, it's true, but they grow at very, very minuscule rates of growth compared to Bitcoin. So I think that is all I wanted to show for this one. I can try to make it a bit more intuitive as we go forward. The thing is, you have to sort of pick a date to show the cumulative effect. And perhaps that's something I should think about, because it's enlightening to show that. But then if you pick too many dates, you get too many things across the screen, and it's harder to, I could actually do the math of like adding these candles up, right? Like up, down, so on. And you can see that cumulative profit. But, obviously you don't want to start it too early, because perhaps not a lot of people were buying here. You want to start, I could start at different date ranges, perhaps, and show a few. Maybe I'll do that for the next video. But again, I think if you think about this and what Bitcoin is doing versus the just unbelievably established global assets such as gold, there's nothing more established than that as a store of value. And then such as stocks, the stock market's been around for 500 years, primitive for sure, in medieval Europe for sure, many centuries ago, but from the UK, a few hundred years for sure. And established stocks, they might give you, let's put the percentage and Bitcoin percentage. Established stocks might give you generally something positive every month. Few Maylux moments. All right. But, Bitcoin, even as it gets bigger, the percentages dwarf what you're getting in stocks. Okay. To be sure, you can deal with a lot of stupid Bloomberg articles that are going to tell you that Bitcoin is dead here. All right. And here they're going to revalue it and say it's because something Trump said or whatever. As we know, that's not the case. The reason it's not the case is that it's growing at a 96% R-squared power trend rate of adoption, which is something that networks do when they grow. They grow proportionately. The bigger they are, the smaller that they will grow percentage-wise. Okay, but that's a proportionate growth, and that happens with things like a web traffic, nodes, networks. It happens in cities. It's not like compound growth with stocks and bonds, all based on compound interest, which is constant growth. Okay, so Bitcoin does not grow at this number 2 value, and you can just see that by the absurdity of the projection. Getting up to $42 million per Bitcoin would be fantastic by 2030, but that's not how Bitcoin grows. But it is how stocks grow. Okay, just repeating a little bit from yesterday's video, we can clearly see a power curve now doesn't fit at all on the S&P. Take off the power curve. You see this nice straight line on log scale. Stocks grow exponentially. Okay. So I think that's going to be it, guys. Unless you got any questions, happy to flesh anything out. Any other questions that you have here a little bit more, but generally, stoicism is my message for this video, and I think that you can see that if you just understand the amplitude of these candles, the frequency of these candles for Bitcoin. They're much bigger, much stronger, if certainly a little bit less frequent than the S&P 500. That would also be another good exercise, is just to count the candles. You can clearly see Bitcoin has more down months than stocks, right? Stocks, just you can generally see that stocks win here. They win over gold and they win over Bitcoin, even though Bitcoin is huge on the upside. But with Bitcoin, of course, you get the benefit of just having a really high amplitude here that will make up for the down months. And again, it's not because of just hype or Donald Trump or whatever. It's because it is a network that is sound money that is being adopted globally. $2 trillion asset as of right now. All right, gonna end it here. Thanks for watching. Take care.